Hello guys, my name is Prince aka Kashout Forex aka Euro USD King. So today I'll be showing you my exact strategy on how I trade, especially Euro USD, and I'll eventually also show you a trade I took today morning to show you that this strategy actually works. So first of all, we'll need to mark off our session highs and lows, and to do this we need an indicator called FX sessions, or like sessions. You can see I have the indicator installed, and now we just come and mark our session highs and lows, which is the Asian session high, and extend it up to here. Yeah, that's our one Asian high. Oh, sorry, this is our Asian high, and then we have our Asian low down here. Yeah, as our Asian low. Now it's quite simple actually. We'll just wait for a sweep on Asia high or Asian low, but this is where most traders get it wrong. We need to spot the grab, but this grab has to be inside a point of interest. It needs to be inside. The grab needs to be inside a point of interest. Yeah, this is very crucial for your profitability, because not all the time it's going to reverse, but if it's in a point of interest, then we can be sure it's going to reverse. So which point of interest do you think we have here? A point of interest we have is when you track on the left side, you can see that we have an unmitigated order block here. You track it this side, yeah, we have an order block right here. We mark it as our order block. Yeah, meaning price is supposed to mitigate this order block and then move down. As you can see, I already went a little forward, but all we have to wait for right now is to price create a change in market delivery. So we go to a lower time frame. This was the M15. We go to the M5. We look for a change of character or market structure shift, and you can see our market structure shift came in. Our market structure shift came in from here. If I can just zoom in, our market structure shift came in from here when it took out this low. If you know your ICT very well, that's a market structure shift. Yeah, so if this is a bearish market structure shift, it means we're going to be going down. Now we can wait for an entry when price returns to premium and discount zones. We need to get our Fibonacci tool. We check out premium and discount. Yeah, maybe not that. We're going to be looking for our PD arrays within this move, and if you can see, let's track and see which PD arrays do we have. We have this order block right here. Yeah, you can enter from this order block here. For this entry right now, we can enter for this order block. Yeah, and then if you wanted to enter from here, you would have entered from this. If you look very well, if you know your ICT, you can see what does this look like. This price came boom, 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 what does that look like? That's a very obvious bearish breaker block. So you can mark our breaker block here, and you would have entered from this place, this point here. But since we need to enter from there, you could enter from this order block that's unmitigated from here. Yeah, and maybe you could enter from its consequent encroachment, which is around there. If you enter from there, we'll get our sell order, drag it there, and your stop loss would be a few pips. It can either be a few pips above this level if you want a tight stop loss, like to risk little, or you can just go for this high because it's very likely like the high of the day. Let me mark this for you. Likely the high of the day. High of the day. Yeah. Now this is going to be a sell, and I personally, this is how I personally trade. I only take 2:1 risk to reward ratio if I'm to trade, because I don't take more than that. You can see 1:2 risk to reward ratio, just a little bit there. Then maybe we can play forward and see what would have happened. We play forward and see we hit our take profit very well. Yes, I know some of you guys may say that, why didn't I go for a higher risk to reward? Yes, like we know there's a lot of liquidity here down at the Asian low. All this much liquidity, because Asian session has a lot of liquidity in it, because a lot of banks are looking to trade into the Asian highs and lows. So if you wanted, you could take profit at this Asian low, because we know price is going to come and sweep the liquidity there. But me personally, I don't do that. I just take 1:2 risk to reward ratio. Yeah, so that's that. And let's check out a trade I took today morning, just to show you how this strategy works. I go to my trading view. Trade I took today morning, it's right there. So this is how it looked today morning. So wait for it to load. Yeah, this is how it looked today morning. Let me first remove the sessions. Maybe, yeah, this is how it looked. Let me first remove this also. Remove this and that. Yeah, so this is how it looked today morning. When I came and checked out on my trading sessions, I found that we have our Asian high and low, as I already said. Our Asian high there, marked it as Asian high, and then we have our Asian we have our Asian high, and we have our Asian low right there, Asian low. Yeah, so when price took out the Asian high, as you can see, it took it out here. You're looking for shorts, since it has taken the Asian high, it's going to take the Asian low next step. So now to take these shorts, I didn't just enter for a trade. Remember, as I told you, you need to be in a point of interest. Which point of interest do you think I had here? The point of interest I had was this fair value gap. As you know, when a fair value gap is filled, let me show you here. This fair value gap, when it was filled, it leaves behind like a zone of supply and demand in the market. So now this is a supply zone we had right here. If you track it this side, a supply zone, or we can just call it an order block. Yeah, when price came to mitigate this order block, it also swept the Asian high liquidity. So now I went to a lower time frame to look for an entry. It was the M5. Reaching the M5, this is how it looked. Yeah, we're just opened up in the London session. When it broke structure and gave me the market structure shift here, it gave me my market structure shift. Yeah, when it broke structure and gave me the market structure shift, I waited for price to return to any of the PD arrays in a premium or discount zone. Since now we're selling, we want it to be in a premium level. As you can see, we have a fair value gap right here. Yeah, fair value gap right there. Yeah, that's our fair value gap. Now all I had to do is, if you get your Fibonacci tool, you can check if this is in a premium and discount level. And yeah, it's at a 61.8. So yeah, it obviously is premium, so we can be looking short on that. So I came and put my short position right there. I entered from right there. I put my stop at this high, as I said, and put my take profit to 2, as I always said I take. 1:2 risk to reward. And yeah, it came out as a profitable trade. But as you know, I said you can always take out an Asian low, and it also took out the Asian low. And some of you who want like huge risk to reward, you could also take 1:3 risk to reward, look up to 1:4, almost 4. Yeah, but the more risk to reward you take, the less likely it will hit your take profit. That's why I always take 1:2 risk to reward. Yeah, and you may see some people, like, if you wanted a higher risk to reward, let's say you have a small account hoping to flip it, you come here very well and see, as I said, you could still place your stop loss a few pips above this level, and then you would target this next low, this one. So you would have a 1:4 risk to reward ratio. So thank you guys for following. Yeah, thank you for reaching this far. This is Kashout Forex, and subscribe, hit the like button if you want to support me, because it really takes much to make these videos. And next time I want to show you like me flipping a $10 account to something like 100. If you want to see that, just click the subscribe button to see more from my channel. Thank you.